Let's take a look at the global market highlights and news for March 5th, 2014. Russia recalls troops, market reverse course. Currencies return to previous prices. Oil and gold tumble as traders book profits. Let's take a quick look at what is happening in the global markets now. It looks like the world survived another military crisis after the Russian defense minister recalled troops, ordering them to return. President Putin said these were military exercises and there was no conflict with the Ukraine. He denied that there were any threats or altercations. In his latest statement, he said that war with the Ukraine would be an extreme step. The question is, was Putin playing chicken or letting the Ukraine and the Crimea know that they were still under the thumb of Russia? The other question, did the international press blow the situation out of proportion? Stocks and commodities eased on Tuesday, most returning to their price levels from Friday. While stock markets believe that the U.S. and Russia will avoid an economy-destabilizing conflict, representatives of both countries continue to lob threats of sanctions at one another. The latest came from Sergei Glasiev, an advisor to President Putin, who said on Tuesday that the Russian government would consider selling its stockpile of U.S. government debt if America and the EU went forward with threatening trade sanctions, according to the Russian news service. Russia's $200 billion in U.S. government debt is part of its foreign exchange reserves, a fund built up by the Russian government to help protect it against financial crisis, stabilize its own currency, and to enable banks and other businesses to function during financially stressful times. In other words, Russian investment in U.S. government debt isn't some kind of noble action to help their buddies over in North America pay their bills. It's a fund that the Russian government has built to help its economy function in a world that trades primarily with U.S. dollars. The Dow Jones Industrial Average gained 228 points, or 1.4%. It was the biggest gain of the year for the Dow. The S&P 500 rose to a new all-time high. The Nasdaq gained nearly 1.8%. Investors bailed out of the safe haven as they rushed into Monday. Gold prices fell more than 1%, while the yield on 10-year U.S. Treasury bonds rose to 2.69% from 2.60% late Monday. Bond rates increased as prices fall. London's benchmark FTSE 100 index ended the day up 1.72% at 6823.77 points. Frankfurt's DAX 30 jumped 2.46% to 9589.15, and the CAC 40 in Paris climbed 2.45% to 4395.9. In the foreign exchange market, the U.S. dollar and euro recovered some of Monday's losses against the yen, the safe haven currency, as a degree of confidence returned to the market. The greenback strengthened to 102.18. The euro edged back up to 1.3736. The Eurozone producer prices dropped in January at their sharpest annual rate since early 2010, more than market expectations, led by a significant drop in energy prices. This decline has put pressure back on the ECB ahead of tomorrow's meeting. Sterling outperformed the dollar, and the euro as data continued to support a strong recovery. Traders will be watching the Bank of England meeting tomorrow. Moving to the commodities market, gold dropped 1% yesterday as equities rebounded after Russian President Putin ended military exercises. Gold rallied to a 4-month high on Monday after investors trimmed assets perceived as riskier following Russia's military intervention. Gold fell as much as 13.75 an ounce to 1336.54. Oil followed suit on Tuesday, tumbling on profit-taking after surging the day before owing to concerns over European energy supplies triggered by the Ukraine worries. Light sweet crude settled at 103.33. This is Amy Anderson from Option Rally signing off. Follow me on Facebook and watch for our new financial terms of the day and our weekly event news. And of course, I'm waiting for your like below if you enjoyed today's Market Watch.